Hey, so what we're looking at is a real settlement sheet, and this is an important document because this is what is presented to you at closing. So we're going to go over it real fast here and kind of highlight the important aspects of it. The title company is the company that really has a major role in the closing. So the title company is the company that they do the title search to make sure that the deed, which is the document that verifies the actual ownership of the property. So the title company does some research to make sure that all that's legit and the seller of the property has the right to sell. They also act as an escrow agent, meaning they can hold deposits and monies until the transaction, excuse me, is completed. Um, they also can prepare the title insurance for the buyer and the lender, protecting them against any claims or other legal issues with the property. Um, they also order the property survey. So the title company is the company that usually, pretty much runs the closing. You usually meet at the title company's office. Although with COVID, you can do this remotely. Um, but uh, you know that's why you see at the top of the settlement sheet that the title company's name is on the settlement sheet because they're the ones that have prepared all this information. So you're going to have the information about the title company, then you're going to have the property address, and then we get down to on the meat and potatoes of the settlement sheet. So you're going to have two major columns. On the left, you're going to have all the numbers related to the seller, so the person selling the property, and then on the right side, you're going to have all the numbers and figures related to the real estate transaction from the buyer. And broken out are the debits and the credits. So the debits is what you owe, and the credits is the credits that come back to you. So you see from the very first line under financial, the sale price of this property was $350,000. So the seller is going to get a credit of 350. So they're going to get the 350,000, which is the sale price of the property, and the buyer in the debit column is going to be paying out the 350. And then the all the other line items are just the various parts of the overall transaction. So you're going to have prorated items. For example, this particular property had homeowner associations, and so that's prorated depending on when the property actually closes, how much has been paid, and is there a credit or is there a debit. So in this particular case, there is a credit of 74.65, which goes to the seller, and then the buyer has to pay that 74.65, and that's why that's in the debit column. And then you also have, and this is usually a big ticket item, are property taxes, and they are usually prorated. So in this particular case, we have the seller um, owes almost $3,500, and that's going to be a credit to the buyer. And then there's some assessments, and then the title charges. Um, you'll see how much the seller has to pay for the various title work that has to be done. And then you'll see on the buyer side some of the costs that they have to pay. Then there's some transfer fees from the government, and then some other miscellaneous fees. Also, during the close, you'll be signing away, it seems, your life because there's so much documentation that you have to sign. And then we get down to the second page, and everything is subtotaled. So you see the subtotal of the seller's debits, how much they owe. These are basically their closing costs, and then the credit, how much they're going to receive. And likewise, on the buyer side, you're going to see the debits, how much they're going to pay versus the credits that they're going to receive, and that's netted out. So when all's said and done, in this particular transaction, the buyer is going to be paying $347,235.09, and the seller will receive a total of $345,197.81. And so, that's the difference between the credit on the seller side. The credit minus the debits equals what is due them. And likewise, on the buyer side, the debit less the credit is what they owe. And that's all signed off by everybody. And as soon as all the paperwork is completed, the keys, the garage door openers, are handed over to the buyer. And from that point on, that transaction is complete, and that property is 100% owned by the buyer. Or if in this particular case there wasn't any financing being done. So if you're taking out a mortgage, it's owned between you and the bank or the mortgage company. Anyways, that's a settlement sheet, and certainly let me know if you have any questions.